So if you have been confused on what a stock is all about or what a bond is all about and which of them is the right investment for you, then you've come to the right place, because in today's video I'll be telling you some things you need to know about a stock and also a bond and how you can get started. So if videos like this interest you, don't forget to hit that subscribe button, because in Waxfly TV we give you information on how to go about making some passive income online. So let's get started with the video. Now, a stock is your share of ownership in a particular company. Now what company do is that they divide themselves into shares, and once you buy those shares, which is known as stock, you become a shareholder in that company, and you are being paid dividend, or you are being paid when your stock appreciates. So invest in the stock market, which is very much volatile, and there is liquidity, which means it is very much risky. You can get your interest or you can get some losses in the stock, so you can only control how the stock market moves. So that's one downside of a stock market. It goes up and it goes down. There is a bullish run, there is a bearish run. You can only predict how the stock market moves. Now when it comes to bond, a bond is money that a company borrows from you. A company, a bank, or the government borrows from you, and they pay you interest rate. And one thing you need to know about the bond is that the bond has interest rates and there's maturity period. Let's say you borrow the government 100,000 naira for a period of 3 years, and they are giving you an interest rate of 18% per annum. That means you are getting 18%, 18%, 18%, a total of 54% for that period of 3 years. And after 3 years, they are giving you back your 100,000 naira. That's literally how the bond works. Now, a bond is more like a less risky investment, which means once you put your money into a bond, you know for sure what you are getting at the end of that bond tenure. If it's 2 years, if it's 3 years. Let's take the FGN savings bond for instance. For the month of September, they gave 18% for 3 years tenure, and they gave 17% for 2 years tenure. So you already know that in 2 years time you are getting your money back. That's your investments, and you're also getting some interest rates before that period. But now the stock market is not like that. The stock market, you put your money, you can withdraw it anytime, and you can only say how your money goes. Sometimes your money can go up, sometimes your money can go down. How to beat the stock market in the fluctuation is that you need to diversify. So once you diversify, if one stock is not doing well, the other one might be doing well, and you can recover your money back. So how to know the best investment from a bond and also a stock? It depends on 3 factors. But one is your age. Now if you are old, you don't really need to play with something risky. You don't really have to put your savings and your retirement into something that is not really influenced by you, and you don't really know the outcome of it. So your age, if you are 40 above or 50 above, you don't really have to invest in stock per se. You have to invest in things like bond, because of now you understand what you are getting at the end of the tenure of that bond. You understand the risks involved, that the risk is very much minimal. But if you are still 20, you can still put your money in stock and also in bond, because of now you can risk your money and you can recover that money. So age is one factor you need to put into consideration when you're investing in stock or you're investing in bond. Number 2 thing you need to put into consideration is your goal. If you want to get your money in a short period of time, then probably a bond is the nice option, because of the bond would help you get a fixed amount of interest for a period of time and you get your capital. But one thing about the stock is that you don't really get the fixed amount of interest, because you can only say if the stock market will return 30% this year or 10% this year. Sometimes it can even return 5% depending on the stock you decide to choose. So know your goal, then know what to go for. Number 3, you need to know how long you want to invest for. If you want to invest for a long period of time, then the stock market is a nice option for you. Considering inflation also, the stock market is also the nice option for you, because of once your money keeps growing, your money has potential of growing, and your money can also have potential of losing. But if you diversify, your money can still grow. But once you invest in bonds alone, if inflation gets high, purchasing power of your money will just reduce, and you might not be able to get your money. For instance, if you put 100,000 naira this year and you're getting your 100,000 naira back in 3 years time, 100,000 naira in 3 years time might not have the same purchasing power as the money now. So the stock is also a good one when you consider inflation. So as a balance, this is not a financial advice. This is just Waxfly giving you some information you need to know. We are not really advising you financially. As an advice, you need to create a balance between a bond and also a stock. If you are still young in investing, you can invest in stock and you can also invest in bonds. Then if you are old already and you don't want to risk your money, then you can just try out bonds and just put your money in a safer hand. If you want more content like this, don't forget to hit that subscribe button. If you have any question, do want to drop your comments in the comment section. I will look forward to answering all your questions. Don't forget to also like this video so as to reach out to lots of persons. Till our next one, peace.